the other important news over the weekend was that Reserve Bank of India has come with new guidelines. And according to the guidelines, promoters can increase their stake from the current levels to 25%. There's still no final decision on whether corporates will be allowed to own banks, which means we don't know if government's plan of divesting some of the banks, will they hit some kind of a pause button. So let's understand the new Reserve Bank of India guidelines with Tamal Bandyopadhyay, author and senior journalist, and you've got Siji Philip, senior analyst with Access Securities. Good morning to both of you and thank you for joining us. Tamalda, let's first understand the headline messaging from Reserve Bank of India. One side you're saying, look, I'm okay if corporates increase their stake. After so much of hullabaloo, yes, no on the Kotak stake, finally you can increase your stake. If you're letting corporates increase their stake or promoters increase their stake, then why the decision of corporate ownings bank has been put in abeyance?
No, I think we need to look at little at the finer points. It's increase the stakes up to what? 26%. It's not increase the stake, it's 26% that they have decided, which means Mr. Kotak does not need to dilute. So for him, it's not increasing. For him, it's no dilution. And the two entities which can increase, I think the promoter in that sense in the banking space are one is IndusInd, which has been talked about, which currently holds 16%. It can go up to 26%, and other nobody is talking about HDFC. HDFC is a promoter of HDFC Bank. I think it holds little less than 20%. I don't know whether it wants to push it up or not. So these are the three benefits. So all of them are not corporates. You know, if you look at this, would you call Uday Kotak a corporate? I'm not very sure. Will you call HDFC a corporate? I'm not very sure. Or for that matter, SFB, if you think the small finance bank, there are only 3 promoters because the rest of are all the holdco based. I think that concept of promoter does not exist there. Who are the 3? One is AU Finance. Is he a corporate? No. Other is Suryodaya. Is he a corporate? No. And a Capital Small Finance Bank also, which was an LAB. So none of them is corporate, they're all individuals. So I think if we say that by allowing the existing promoters, it doesn't, RBI guidelines doesn't talk about promoters, the corporates keeping 26%. It says that promoters can have 26%. I think that's what the confusion comes. It doesn't talk about corporate. So that's the one part of it. The other part of it, it is keeping mum, and I think nobody expected RBI to come forward so fast to allow large corporate houses. And yet another part, Nikunj, you are not talking about that. One very critical announcement, critical recommendation of the working group paper was allowing large non-banking finance companies with 50,000 crore balance sheet and 10,000 10-year track record owned by industrial houses. Now the RBI final, whatever the acceptance, does not mention that also. So it's not only the large corporations, not only the corporations which are which want to get into banking, they need to wait. Even the large NBFCs run by industrial houses with 10-year track record, they also need to wait. On both counts, RBI is keeping mum. So that's another part of it. I think we need to do it separately. The privatization of public sector banks, where we have seen the news reports where the government is will plan to keep at least 26% for the time being. Now, how do you get, if that is your question, how do you get right kind of investors if you don't allow corporations? I don't think there's a bit of a problem. If the government wants to give up certain rights, 26% also would not come on the way. But under different acts, banking acts, which government enjoys certain rights, like the appointment of CEO and sacking of CEO, appointment of board, asking them to do certain things. If those rights are given up, I think there will be enough entities who will be willing to come forward and pick up the stake.
Good Morning, Tamal. I just want to take forward that point. And you talked also about the non-banking portion and also the holding structure, right? For example, a lot of action was expected around Ujjivan, Equitas. We also don't know what's going to happen with the non-banking business of, let's say, an ICICI or Kotak. So there is no clarity?
You're asking me?
Yes.
Yeah, I think I think on that point there is no clarity, but it has spoken about the scale-based regulation of large non-banking finance companies. So that's pretty clear that the large non-banking finance companies will be under a regulatory scanner much more intensely than what they are now. I will not call it soft touch regulation, but it will be RBI will be far more vigilant on them. But the other part of the bank owned non-banking finance companies, I'm afraid I have not seen much on that. And the holdco structure is it is said that it's preferable to continue with the holdco structure. But if you do not have any other business, it's only the bank, then probably RBI is fine without the holdco structure.
Siji, if I can come to you and begin with your opening comments. We've already seen reports coming in of how the Hindujas are looking at increasing their stake, a $1.1 billion financial chest for that sense being readied. HDFC Limited now has headroom when it comes to HDFC Bank, Bandhan Bank. There could be action as well. If I could get your opening comments.
Yeah, so thank you. So basically, whatever the steps which were announced on Friday, in terms of the promoter shareholding, definitely it's a positive because there was kind of uncertainty and also some expectations for building up. So this stake increase from 15% to 26% would definitely be a positive, and more specifically for banks like IndusInd, where the promoters have earlier also shared the intention of increasing their stake. Also, other banks like HDFC Bank, where HDFC Limited can increase its stake. Banks like DCB, where the Aga Khan promoters can increase their stake. So, for these kind of banks, definitely it is a positive step. There are certain guidelines which have been announced, and the recommendations are on track, and a gradual calibration with the entire financial industry. The RBI has remained silent on the NBFCs getting converted into banks, and also the conversion of large corporates getting more into the banking game. So we feel that the bank is RBI is taking a more calibrated approach and looking out how NBFCs are, getting attuned to the larger scale regulations which were announced earlier. So as the announcements coming, possibly once more on a form of review.
Sure. CJ, just on the point that you're making, RBI clearly is still reluctant on issuing bank licenses to large corporates. To add to that, payment banks also allowed to convert into SFBs, but only after a gap of about almost 5 years. With large numbers of fintechs as well as SFBs now, how do you really view this? And is there a large need clearly to issue more licenses?
We feel that RBI has been always been cautious about granting banking licenses, and if we see that payment banks have just got listed, so definitely a watch period is required. How things pan out, how the entire financial system gets attuned to the various new entities which are coming in with the likes of fintechs. So just a 3-year proposal, which was given in the earlier recommendation, would be considered a slightly shorter duration compared to a 5-year duration, where one can actually see the gradual working and how it plays out in the financial system. So that would be one of the key reasons why the 5-year period has been kept rather than switching to a lesser 3-year period of regulation.
Sure. Tamal, would you want to come in on this point? RBI's reluctancy to issue licenses to SFBs, to payment banks, or would you say that they are fair in being a little hesitant to issue banking licenses right away and have made that a mandatory gap of 5 years?
Well, two parts of it. One is the payment bank. I think RBI probably has not officially accepted, but let's accept that payment bank is a failure. The payment bank model has not taken off in India. Only a few entities which are in the telecom space, that also not all of them who had got in. Continuing with that, but that's basically a sort of the part of their larger business plan. I don't think they see payment bank as a business by itself. And look at the other payments bank, where have they gone? So after the UPI, I mean, why do you need any exclusive entity only for the payment bank? What are they doing which a normal bank cannot do? So I don't think there's any discussion required. Do we need any payments bank on why RBI is reluctant? Even if RBI wants the door for payments bank, I don't think anybody will knock at the door seeking any license. So that period, payments bank, I think we can, there's no discussion required. That is a failed attempt because the context has changed, and with the increasing digitalization, everybody else can do anything and everything and more what the payments bank are doing. As far as SFB is concerned, why SFB? Even universal banking license, on both the windows are now on tap, and there have been quite a few applications, and at least a few of them are very are interesting entities, and they have interesting business model to offer. So the RBI committee is looking into it. I would like to believe it should. Yes, I agree with you. It is taking a little longer than what it should have taken probably. And also we need definitely many more banks. But RBI is taking time. But we would like to believe that soon, probably before the end of this fiscal year, which is March 2022, we will see some kind of a few names which RBI would say yes to it. But having said that, even though Reserve Bank of India has not given any license, any fresh license, but in the past 1 year at least, I think 2 SFBs have come. One, the Unity SFB, which is a Centrum BharatPay joint venture, which has taken over PMC Bank. And other, one of the cooperative banks has been converted. As we speak, I think last week Reserve Bank of India cancelled its cooperative bank license because it's now on SFB. So even though the new licenses have not been given, there are at least 2 SFBs that have come in the picture. And finally, you have noticed that Reserve Bank of India has raised the initial capital requirement for SFBs from 200 to 300 crore, and for Universal Bank 2,000 crore. But those who have already applied for them it is not applicable. So while we need more banks, and RBI also cognizant about the fact, but I think at the same time RBI needs stronger entities to get into the banking space, because the capex will be much higher now. Apart from branches and other things, you also need to spend heavily, not only in physical infrastructure but digital space, for technology. So which is why I think those who are the fence sitters, at least I am aware of few entities, NBFCs, which would have gone for SFBs, now they will think about twice, because now they need 1.5 times more capital than it was till now. So that's the long and short answer to your question.
Okay, we can go on debating on this, can't we? But Tamal, Siji, both of you, thank you so much for taking the time out and joining in today on this discussion.
Thank you. Thank you.